What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Hope you're doing well out there. Happy FOMC day. We're going to react live to the FOMC drop. But before we do that, let's do a little updating on the current situation. So let me find it. We're going to go with this one first. So the current pricing in the market is a 97.9% chance of no move from the Federal Reserve. However, we can also see like more dovish statement in their policy statement, and there is still a 2% chance of a cut. I was telling Telegram before we went live here that I do think that this was more of a consideration this time. Yes, now they've most likely decided to hold rates steady. But I do think that there was significant consideration if now is the time to cut or if they should wait to September. If we go out here to September, we can see that it is a 100% chance of a cut in September with a 90% of like a single cut of 25 basis points, or they could do a bigger cut, like a double cut of 50 basis points. That's at 10%. So we'll see how this goes. These are about 6 weeks apart usually, and so we have time. Okay, now let's go into some stuff that I wrote this morning, bitcoinandmarkets.com. Weird cycle patterns and FOMC watch. So we are 9 minutes away from the drop. I'll make sure to catch that live. Let's just go through this real quick. So this is very, very interesting. Okay, this is a monthly chart for Bitcoin. And you can see from the bottom of the last two cycles to the top was 35 months, in both cycles, the 2017 top and the 2021 top. They were both 35 bars from the market bottom to the ultimate top month. Then if you go from bottom to bottom, they were 47 months apart. And so then I'm just dragging this out here, extrapolating 35 from the bottom would take us out to October. So October of 2025. My previous estimated cycle peak was going to be in June. That was just kind of a educated guess in the middle of December of 2024 and December of 2025. Now, I can see maybe going into July, August, September even for this high that is usually 35 months out. But anyway, so I talk about that a little bit here. Also talk about Fed rate cuts. So Bitcoin stands to benefit from a rate cut, not in a way it's typically understood. You can find out more of that in other bits of my content. But because Bitcoin serves as a hedge into scenarios, for those who view Bitcoin primarily as an inflation hedge, a Fed cut will be seen as inflationary, leading them to buy Bitcoin. For those who correctly view Bitcoin as primarily a deflation hedge, a Fed cut signals a deflationary recession, prompting them to buy Bitcoin because its value is not dependent on counterparty solvency. Either way, the conclusion is the same: buy Bitcoin. This is why I'm closely watching charts like this one below. And what's interesting, so in the white kind of stair steps, that's the policy range. We have the 3-month trying to fall out of this policy range. I hope that's coming across clear. But it has been falling in recent weeks, and everything else is falling as well. Of course, you know that falling interest rates means that money is getting tight. It's not, falling interest rates, when the Fed lowers interest rates, it doesn't make money looser. They follow the market, and the market is moving down. You can see back here in 2019, all of these rates were below their policy range, and then they started cutting. So this is the Fed following what the market is signaling. So as the market is going into safe and liquid assets like U.S. Treasuries, yields will come down, and it will pull down the Fed's yields. So that's part of my conclusion here. Contrary to popular belief, what the Fed does today doesn't matter much in the grand scheme. If they cut rates, yields will fall. If they just do more dovish language, yields will fall. And if they maintain a hawkish stance without cutting rates, yields will fall. So all scenarios lead to lower yields and a rush into Bitcoin for safety. Okay, so that's why I wrote today. These are the free minute type posts that come out, Bitcoin Minute, Macro Minute. You can sign up at bitcoinandmarkets.com to get all of those. All right. let's go to this one. The Fed is out with their stuff that they're talking about. The Fed won't cut today, but it will almost certainly cut in September, like we said, and the market certainly thinks so, pricing in more than 100% odds of a rate cut. Okay, and that means that there's odds of 2 cuts or 25 basis point moves, so 50 basis point cut, and to signal that it will have to change the FOMC statement. Okay, then they're talking about all the different changes that could happen. The other theoretical stuff is in the original preview note. Here we wanted to focus a little more on the practical implications of today's decision, which the market views, according to the one-day straddle, as moving the market plus or minus 1%. We will watch that live reaction here in just a second. We are at 156, so we have 4 minutes until the drop of this. What else? There's virtually nothing Powell can say that will surprise stocks dovishly. After all, it is beyond consensus that Powell will lay the groundwork for a cut in September, so he'll get more dovish. But that's what stocks are already pricing in, they say. As the table below shows, there is now a greater than 100% chance of a cut in September. All right. In conclusion, below are some trades. All right, blah, blah, blah. Don't care about that. Don't care about that. Okay, so that's that. Let's go to the FOMC calendar. You guys can find this, just Google FOMC calendar and it comes up and it will be populated right here. Let's refresh just to make sure. And what I'm thinking about doing actually is let me grab this previous statement and copy. I'm going to go over into this comparison tool and paste that. And then when this next one drops, I will do that for that to see what are the changes here. 7 people watching what's going on. Check out bitcoinandmarkets.com. If you're watching on Twitter, jump over to YouTube or YouTube or Rumble and subscribe over there, please. I'm trying to grow those channels. And if you are on Twitter, you can also go to, check out the community at t.me/Bitcoin and Markets on Telegram. Okay. Waiting 3 minutes. What else should we talk about? Let's talk about this one while we're waiting for 3 minutes. This is the Tether transparency drop of all of their stuff. Well, let's talk about their assets they hold. U.S. Treasury bills. Okay. So that's 1 year or under. 80.9 billion. Overnight reverse repo agreements, 11.2 billion. Term reverse repurchase agreements under $1 billion, just at $1 billion. Money market funds at 6.3 billion. So this makes them a huge owner of all of these assets. And of course, we have Bitcoin down here at 4.7 billion. And what does Marty Bent say here? He says they holding a total, if you add all those categories together, 97.6 billion in U.S. Treasuries, surpassing Germany, the UAE, and Australia. You think the government can ban this now? You think the government can crack down on Tether? Another story that came out just today was that it was Circle all along. It was Circle going after Tether with the FUD. They even bought $10 billion worth, I guess, of Tether and tried to dump it all in one day to unpeg Tether and crash them. And it didn't work, because Tether is completely solvent. And many, many people throughout the space talked about how Tether was insolvent and they were just pumping the Bitcoin price. Of course, this channel, we've been saying all along that Tether was solvent and Tether was the best option for a stablecoin. Okay, let's go back to here and refresh. No drop yet. 159 should be coming out in 1 minute. Next calendar, you can see this asterisk right here for September. That means that we get another summary of economic projections, the SEP, that includes the dot plot and other projections like for unemployment and GDP and things like that. Okay, 2 o'clock. Let's refresh. Nothing. They're behind the 8 ball. Still nothing. There we go. Now, before we even read anything, I'm going to grab this. Oh, it's longer. They added a whole nother paragraph. So that's pretty significant. Let's see. Okay, just a few different items. Okay, back to this page and let's go. In support of its goals, the committee decided to maintain the target range of the Fed funds rate at 5.25 to 5.5%. So they are held steady. That's what the market was expecting. It should not be reacting too terribly right now. Let's read through the whole thing. Recent indicators suggest that economic activity has continued to expand at a solid pace. Job gains have moderated, and the unemployment rate has moved up but remains low. What was it? What did it tick up to? 4.3%. I mean, that's starting to concern people. And then you have the SOM rule, which is talking about the what is it? The 3-month change over the 12-month change. It's starting to get concerning. Okay, so yes, the unemployment rate has moved up, but it remains low. I would say remains to be seen when it will break into recession territory. Inflation has eased over the past year, but remains somewhat elevated. We had a 3% print in the CPI. PCE core is under 3%. And we had a negative print on CPI just for June. We'll see what July brings, but I would say it is somewhat elevated. That's a correct statement, but it's coming down. And I've even, anecdotally, I've noticed prices in the grocery store coming down dramatically. That's where, where a lot of people talk about noticing price rises. I've seen notable declines in things like meat, mainly meat and produce. I've seen some prices coming down. So it remains somewhat elevated, but prices are getting there. And of course, the Fed doesn't really do anything about this. If the Fed wanted to crush inflation, they could have just raised by 500 basis points right away, but they didn't. They slowly moved up as the market allowed. They followed the market up. If we go back to my previous post here and go down to here, you can see rates were going up. Then the Fed came in behind. When they went over, they were unable to push these yields into this range. They were impotent. This exposed how impotent the Fed is because they were unable to force rates into this range and keep them there. They follow the market. All right. So if they wanted to crush inflation, they would have just raised 50 basis points right away. 500 basis points right away and gone like that. But they did not do that because they couldn't. That would expose them as being insignificant. Okay. But anyway, inflation has eased over the past year, but remains somewhat elevated. In recent months, there has been some further progress toward the committee's 2% inflation objective. That has slowed down quite a bit. But after June, if we get soft July and August, those are going to be major, major moves down in the year-over-year number. I do expect them to be soft, like I say. The committee seeks to achieve maximum employment and inflation. All right. Risks to achieving its employment and inflation goals continue to move into better balance. And what they mean by that, I'll reiterate what this means, the better balance. So the two sides of their mandate, inflation and maximum employment, inflation was heated, so they forgot about maximum employment. They kind of said, "Oh, we're not going to care about causing a recession so much right now. We are going to be fighting inflation." But since inflation has come down, now they can start caring about supporting employment and trying to avoid recession. So that's why it's coming into better balance. The economic outlook is uncertain, and the committee is attentive to risks on both sides of the dual mandate. In support of our goals, we read that in considering any adjustments to the target range for the Fed funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards the 2%. So this is not at all dovish. If we go to our comparison tool that we plugged in here, they made a few changes to the second paragraph, which doesn't really matter. They're talking about their balance. Made a few things here, but they did not make any changes to this entire paragraph. That's the important one, that where we would see dovish movement, and there was none. There was none. Very, very interesting. So they have pretty much changed nothing. And this is one thing too about people think that the Fed is so of course they call it quantitative easing. And they like laser focus, like they have to use all their big brains and all their hundreds and hundreds of economists supported by thousands of universities, economics departments, and they just stay the same. They did absolutely nothing meeting to meeting. Like, what would you say you do here, Fed? They don't do anything. They just kept everything the exact same. It's kind of crazy to think about that. And it's not quantitative either. If it's quantitative, they would say, oh, we need to decrease rates by 5 basis points. No, they don't think like that. The action is the message. Raising, lowering, staying the same. That is the message. It has nothing to do with absolute values. Okay. It's all about the movement, the direction of movement, and they're just staying the same. So they need all those high-paid people to come up with this decision. And same with quantitative easing when they're doing things that like 80 billion a month. Well, why isn't 75 billion what's needed, or maybe 102 billion a month? Why is it 80? And then you keep it at 80 for a year. There's no tweaking. So that exposes that they don't do anything. All right. In assessing the appropriate stance of monetary policy, the committee will continue to monitor. Okay, this is all just boilerplate, so that's it. Let's take a look at what the markets are doing. If I can bring this up. Bitcoin, not really reacting. I'll go down to the 15-minute, see what's going on here. Nothing really. Bitcoin does look like it's kind of bottoming, maybe trying to break out here a little bit, but no reaction to the FOMC. So we will see if this can happen. Of course, this isn't any sort of big breakout. It would just be going towards these recent highs. If we go to the daily and take a look at this, let me just delete that arrow and line. So if we take a look at the daily, this I thought was going to move much more than it did. We had some FUD with the U.S. moving coins to different custodians. We have the Mt. Gox overhang that doesn't seem to be selling many coins or anything like that, but it is just putting a damper on things. I'm surprised, though, with how bullish the weekend was with the Trump stuff and the Bitcoin bill and multiple other jurisdictions now saying they're going to do a Bitcoin reserve. This is just kind of amazing to me, but it will consolidate and it will go higher. I have no doubt in my mind. All right. What else can we look at? Let's look at the US 10-year, one of my favorite charts. It was sinking on the day, has kind of recovered. Let's go down to the 15-minute. Yeah, it's coming up. I don't know. I mean, it's not significant move either way, because you can see like today it was down. It's just, coming back and getting back to the levels of where it opened this morning. So not a big deal. How about the dollar? Dollar is going up slightly, but again, this is the 15-minute chart. No big move really from the dollar, just back and forth. And finally, let's take a look at the S&P 500. It opened up on the day, but no significant reaction here from the FOMC. So that's what I'm seeing out there right now. And let me just check the comments here real quick before we sign off. I'm going to go to this tab, my homepage, bitcoinandmarkets.com. Make sure you guys check that out. Subscribe if you are not subscribed. And let me take a look at the comments. Probably going to just say the same thing he's been saying. Oh, Dex, you nailed it, man. They did not change a single thing, dude. Data dependent, 1 month of fiat or flat CPI doesn't make a trend, etc. Yeah. Courtnard, what's up? Also notice price deflation. OxyClean got a couple dollars cheaper. Yeah. Yeah, a lot of things are getting cheaper. I've definitely noticed that in the supermarket. I mean, I don't know about big ticket items. I think like car prices are coming down. I've been putting off getting my wife a new car, and it might be good timing because car prices are starting to come down. House prices are starting to come down. There's a lot of these big ticket items that are starting to fall. We saw the shelter component of CPI falling from 0.6 month over month to 0.2, I think it was in June. We might even see it continue to fall. But yeah, CPI is starting to slow down dramatically. And that's what we expect going into recession. Okay, we expect that consumers are tapped out. They can't buy. So what do the sellers do? They have to lower their prices. But one thing, if we could bring this back to the PPI, which is the producer price index, that's supposed to be seen as upstream from consumer prices. Okay, the manufacturer pays this, or the distributor, the wholesaler pays this, and then the consumer would pay. If those prices are changing, then that would be passed on to the consumer. But if the consumer's tapped out and producer prices are increasing, but they can't pass it along to consumers, what happens? Yeah, a lot of the producers go out of business. That's what you see in a recession. And so right now, last month, we saw PPI actually going up as CPI was going down. That's this one flag that you could say, or one signal that a recession is coming. All right. No other comments. Let me check out Telegrams real quick. Okay, E, you have a good question here on Telegram. With Tether making so much money, what will the Fed crowd do? Will they try to take it over, shut it down? They probably not liking. I think they love it, dude. I think they love it. They are, my belief or my prediction years ago, this is like towards when Tether was just getting going. When did they get going? It was like 2016 or so. So they've been around for 8 years now, maybe 7 years, but years back, as they were starting to get into the billions and double-digit billions of circulating supply, I was like, the Fed is most likely going to force them to hold their stuff at the Fed. So they can't have their own private banking like Tether does. They can't have their own private stash or hold it. They're going to have to hold it with the Fed. And so that's what I think is going to eventually happen. But yeah, it's going to be the biggest customer. Like what, they're at almost 100 billion. And where's China? They're under $1 trillion now, I think. And so is Japan. Or maybe Japan's a little over $1 trillion. But you have Japan and China. And then Tether. I mean, this is a significant player. If it keeps growing, that would be, it's going to be interesting to see what they do. But I don't think they hate it. What they hate is that they can't control, or they feel, the globalists, not the Fed, the globalists feel they can't control Tether. They also don't want the euro to go under. So another argument against the euro, and part of these sides, alliances, or the battle here between Tether and other currencies, is the euro. There's no demand for the digital euro. We can go to Tether's website right now. Let's do that. Tether.to. Okay. Let's go to transparency. Is that what it is? Yeah. And let me make sure this is sharing properly. All right. So you can see USDT 114 billion and Euro Tether 29 million. 29 million euros. Nobody wants this. And that is a huge scare for the ECB and the globalists. This is not good. This means nobody wants the euro. Everybody wants the dollar. And this is global, right? Tether's global. Bitcoin's global. It's a true competitor here. And people holding euros can buy US dollar Tether. I mean, this is terrible in their opinion. And so there is that part of the discussion to talk about. But the Fed and the ECB are not on the best terms. The ECB is pushing for climate policy to be implemented through the Federal Reserve, through the central banks, that they're going to give bailouts to green companies versus non-green companies. The oil companies won't get bailouts. The car companies that don't have EVs are going to be, not get bailouts. Whatever the case is, they're going to do monetary policy that is directed at a climate agenda. And the ECB is all on board for this. The Fed said, no way. Powell went and spoke at some conference over there, central banking conference in Europe a couple of years back. And he was like, we're not doing that. That's not our role. It's not the appropriate role of a central bank. Right to their faces. I think they might have thought they could apply pressure to Powell, but they couldn't. So Powell is not only stiff-arming the climate stuff, he's stiff-arming a CBDC. He said many times it's not going to happen in the United States. That when people say, "Oh, you're looking into it, you have a pilot program," and he's like, "No, we're watching it like we watch every other kind of development. We're not in research and development or anything. We're just watching what's going on with the market." And so CBDCs are not going to happen under Powell. And if Trump gets elected and Powell stays, or a good replacement picked by the bankers comes in, not a globalist stooge, like not a Lael Brainerd. She's a globalist and she would do a CBDC. She said that she would do a CBDC. And so, yeah, that's the position with the Fed. That's Tether versus the ECB versus the euro, all of that. Let's go back to the website, see if there's any other comments. John Delaney, what's up? USDT. Eric Jones, no, USDT was not created in response to the Bitfinex hack. They created another coin. I can't remember the name of that one, but it was a Bitfinex coin. And they gave it to you. They gave you the same amount of Bitfinex coins as the value dollar or the dollar value of your Bitcoins that you lost. And I did lose Bitcoins on Bitfinex at that time. And so most people just sold. So the minute they got those new tokens, they sold it for dollars. But a bunch of people held on to it, and it did appreciate. It made back all of the losses and more. So it was kind of an interesting experiment that they did there with Bitfinex. But that has nothing to do with Tether. Let me see if they have a history of Tether on the website. I got it. About us. Let's see. I mean, it came from the Bitfinex people, but I don't think it was in response to the hack. But I'll look that up. That'd be interesting to know. All right. All right, guys. Well, that's going to do it. Kind of a shorter stream here today. Thanks for joining me. Once again, the Fed kept rates the same, but everybody is expecting that the Fed will cut in September. Actually, before we leave, let's go check that. That'd be interesting to see. So, FOMC. Let's go to. So, one cut. Remember, we just looked at this. It was at 90. Now it's at 93.5. So, one cut is looking more likely because there was no dovish statement. There was no dovish, change to the policy statement. So, there you go. Interesting. All right, guys. Thanks for joining me. See you on the next one. Bye.